Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods over the short term for United Health Group. First of all, let us check, as usual, the major structure of the stock over the monthly chart. We notice, of course, that over the monthly chart, the nearest monthly support is relatively very far away, around $288. No significant support level over the monthly chart other than that. This is the nearest one. The second nearest one is around $200 area. So relatively, these levels are a little bit far from the current price, around $535. But in general, it is clear that the major structure is healthy and heading upwards. The only sign of a relative weakness is the shooting star, and this shooting star is its shadow. The tip of its shadow is pointing at $553. Keep this in mind because we will talk about it a little bit later on the weekly chart. But for now, the only little bit sign of weakness over the monthly chart is the shooting star shadow, which is pointing at 554. Over the weekly chart, the structure is healthy. The uptrend is confirmed and valid, connecting higher lows. It's a classical uptrend, very clear, healthy, positive one over the weekly chart, as well as the channel line connecting the highs together parallel to that trend line. The only thing we need to take care of is that the current price over the weekly chart is very near to the channel line or testing the channel line. And as we can see, when you test the channel line, a corrective wave may take place. This corrective wave may behave into a sideway, such as this one, or behave as a corrective downward wave like this one. So although the market of United Health Group, although the chart is showing an uptrend over the weekly chart as well as the major structure over the monthly chart, but I think over the short term there is some kind of fear of a corrective wave that may form around the channel line, and this corrective wave is formed due to the expected selling pressure around the channel line plus the horizontal resistance around $555. Keep in mind that over the weekly chart we had a clear top or a clear peak around 555. So at this level, this 555 level, we do have some resistances of different types. The first one is the tip of the shooting star candlestick over the monthly chart. The second resistance is the top of the peak over the weekly chart, and the third thing is the running channel line of the weekly chart of the uptrend. So we do have a triple what we can say triple signs of resistance running. All of them are running at the same level, 555. I mean an area, of course. I mean the zone of 555. It may increase $5 up or decrease $5 below, but in general this area is showing a group of resistances running together within the same zone. So keep in mind that we need to have a look over the daily chart for the short-term details to identify when a correction may be created and when the corrective wave may start. First of all, we do have some kind of short-term daily support around 518. And as you can see, we do have some kind of ultra short-term support around 528. So these are the most two important levels in the identification of any corrective wave, if any corrective wave is going to be created. Why? Because a break below 528 will be considered a clear sign of weakness, especially if this came with a 2 days close. And if the stock break below 518, this will be a sign of danger, and this will confirm the creation of the corrective wave over the short term, which may easily target 490 level and may easily target the uptrend from the weekly chart around 480 level. I do not think, if the corrective wave is established, I do not think that the 500 psychological level will be a station during the fall. I don't think so. It will easily penetrate that level to the downside and target the 490 level, maybe the 485 level, which is where the uptrend of the major term weekly chart is running. So we will consider United Health Group bullish as long as it is above the 528 downward to the 518 zone. This $10 area is considered a very important support level and very important support zone, and as long as the stock is closing above these levels, it is considered in an impulsive wave to the upside, which may continue its rise. If these levels are broken as mentioned, a corrective wave is created. Please keep in mind that if the stock managed to break above the 555 level, it will open new targets to the upside, starting from 580, reaching the channel line around $600 and maybe more. Of course, it is less likely to break above the 555 level over the short term, but this is the second scenario that may take place. So keep in mind, if it did take place, the stop loss will be around 544 and your targets are 580 and 600 over the short term and medium term. It will be a low risk virtual trade as long as it is in the same direction of the prevailing upward weekly trend. That's it for United Health. See you soon, and please feel free to like, share and subscribe, and good luck.